Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, February 3rd, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see here the ES continues on a path higher, has been trending up overall. However, we've kind of broken down a little bit here, and things have changed with regards to the monthly pivot range. Something we'll talk about tomorrow. If you join me tomorrow, after the market closes, we'll host another monthly market outlook for February. So tomorrow, Tuesday, February 4th, please join me for that. But one thing here that I notice, which is very interesting, is we had a higher value relationship develop here at the top of the pivot ranges here for the month, but we closed below it. And that is a higher value with a change of bias. And what that would suggest is weakness to come. And what tends to happen is if price rejects or price opens the month below that lower value and rallies into the pivot range, any rejection here could be an opportunity to sell it for another push downward. And so that's going to be something to watch out for. If price cannot get back above 32.60, that's going to be indicative of weakness to come. So that's going to be something you're going to want to watch here early in the month, that zone. Alright, let's take a look here. Overall, obviously this market remains in an upward trend, but if it were to pull back and fail to hold the midpoint of the month here, that would suggest a push down into about 31.80 to 31.50. Any retest into that zone could be a great trap for a push back up later on in the month. So even if we do push lower, we'll be looking between 31.50 and 31.80 for a shot at rejection. Below there would suggest somewhere in the 30.50 zone, right around where the 200 and the CLVN is. All right, let's take a look now at the NQ. You'll see here that the NQ looks very similar to the ES in that the trend remains very bullish. However, unlike the ES, this is a higher value relationship like you would normally draw it up. It would be higher here. Price would close above the pivot range for the month, and that would suggest more uptrending behavior. One thing to note though is that this is a narrow pivot range for the month, and after you have a very mature trend that's been going on for 3 or 4 months, when you have a narrow pivot range like that, that could be indicative of a push back down. And again, if we were to push back down like that, testing this low would offer an opportunity to trap somewhere between, call it 85.50 and 86.50, somewhere in that zone. That could be an opportunity to reverse it back toward the pivot range and perhaps back toward the top end of the range. Similarly to the ES, if we were to break below 8,500, then perhaps we're headed back toward the lower CLVN and the 200-day, which is around 8,100 to 8,150. So that zone right there. So again, we'll see how this opens up early in the month here. A failure to hold above the pivot range would suggest at least a retest of the previous month's low. Alright, let's take a look now at crude oil. Now here's a push in crude oil that has happened here overnight. Very, very strong rejection here that we've seen. One thing we talked about last week was it didn't appear like price was done going down just yet. We finally hit a low here, and the previous low, if you'll recall right here, this low is 50.6. This low is 50.5, and now we have this low at 50.42. And we've bounced back up already, rejecting the previous month's low and coming right back to the previous month's close where we currently are. Previous week's close as well. So that zone's going to be very important, because if there's a rejection here at this point, remember, the short-term move just very quickly can get you back to a retest at 53.15, the FOMC key level, and up to about 54, where we sold off recently. That would be the short-term swing for this week. And then if you look up, perhaps by the end of the month, we may be all the way back toward 57.28, which is the midpoint of the key range. And if you look up maybe a while longer here, 2 or 3 months down the road, it could be back toward that 63, 64, 66 zone. So this has been the trading range that we've been witnessing here for a while, and here we are taking out that low. Now again, if price can close above where we currently are or right at it, 51.60, 51.70, that would be very bullish and would suggest much more upside ahead on a swing basis and perhaps longer term. All right, let's take a look lastly at gold futures. Gold here, again, we had a very narrow range that developed here on a 10-day basis and a 5-day basis. We got the breakout to the upside, but it hasn't been a very significant breakout. It has continued quietly higher, but it's been very deep pullbacks, very deep rotations within that pullback. It's continuing to hit the 8-period average and push higher. So it looks like it's ready to really move here, but again, direction right now has been up. If price can stay above that 1540, 1525, then again we could be pushing much higher ahead. But we'll see how this develops here heading into the new month, as we've got mostly range-bound action to finish the month after the early pop here after the holidays. So right now, very narrow price action with an upward bias. Everything suggests more upside price action here unless we fail to hold that 1565, which is now the midpoint of the previous month. Failure to hold there would suggest a rotation back down. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Again, please join me tomorrow, February 4th, Tuesday afternoon, for a monthly market outlook for the month of February. We'll be talking stocks, futures, higher time frame ideas, in addition to what to look for the rest of the month and into the end of the Q1. All right, everyone, have a fantastic rest of your day, and I will see you in the trading room. Take care.